have a lot of people from different institutions, from different sectors, from different backgrounds. So let's use that strength and really use that energy also on our career learning platform. And for the next 40 minutes, we'll be diving a bit deeper into interaction with you, and we'll be using Mentimeter for that. So let me share my screen. I'll be sharing a link in the Zoom chat. If you click there, you will go to the Mentimeter. You can also use your phone. So we first want to do a practice question to get you familiar to Mentimeter. And the first question is, if you were the world minister, let me move this sharing thing, world minister of food finance for a day, what would be your top priority? So you can rank the following 4 items: the price tag, the farmer, the waste, or the future, from 1 to 4. So you can move the one you would prioritize on the top, and the ones you would prioritize the least, put on the bottom. We have around 100 of you that are in. Let me show the responses. This is also a very difficult question because they're all very important and they're all part of the solution. So this is a practice, and it's also nice to see where our priorities lie. The future, investing in a food system that helps the planet instead of harming it. But it seems like all the answers are a bit on the same line here. All right, we see 112 of you in. So I'd like to give the word to Marielle, who will guide us in the first discussion starter of today.
Yes, you will do the technical backup of the Mentimeter, but we have the first statement, and then each of you can say which one of the answers you think is the best answer. So national governments have a transformative opportunity to accelerate food system transition. With this, government should prioritize. So which one of the below you think are the most important? De-risking private sector investments, adaptation of regulation and policy in stimulating sustainable inclusion, repurposing of public budgets, and you can also choose all of the above and then none of the above. And while we are seeing the answers coming up, eventually we will also like to ask Getachew as the representative of the domestic public sector, how you look at this and how you would prioritize it, and also which of the above priorities is currently addressed by the Ethiopian government. So we see 45% say all of the above. Getachew, do you want to comment on this?
Yes, this is interesting. I think it's so for me the answer is all of the above because in Ethiopian context these 3 priorities are not sequential. They are not optional. So they are interdependent and they reinforce each other. Let me explain. For example, the de-risking private sector investment is very important. Ethiopia is driven, the policy is a private sector driven policy, and the government is there to catalyze. So we still depend on private financial institutions, banks, insurance, microfinance. These are like the archetype of financial institutions we have, but for their investment to go to rural sector, the government has to play a catalytic role in terms of mobilizing funds to incentivize them, to de-risk them, to share some of their risk, and also to do the demand side ecosystem development. So this is one.
Sorry? Yeah, thank you.
Second, we also want to do a policy is very important. The regulation is very important. So we have currently like undergoing a number of policy developments, the collateral usage policy, the land reform, the incentives, subsidies, allocation of private fund. So without policy framework, without regulations, we cannot encourage private sector to go. So that's also another thing we should do in parallel. And in terms of repurposing public budget, there are a number of duplications in this country. There are a number of funds which are misutilized to a program which is not sustainable and scalable. So we are under NAFIR as well. We want to repurpose public fund in a way it will catalyze national scale-up sustainable programs and in the priority sector. So these three are used in a way it is reinforcing each other. So it's not an optional. These are like the tools that we use in different contexts.
So thank you. I would also like to ask Thomas if you saw some comments from the public on this, and maybe ask some of the responses from the chat to react to this statement and also to contribute to the discussion. I saw already there was one statement on prioritization of government.
Yeah, so
Thomas.
Yulia Mescala, it wasn't a question, it was a statement. African governments always have competing priorities, so it always becomes critical to prioritize your asks by what creates the most public benefit. That's why some of us only chose one of the choices instead of all. So Getachew, maybe you'd like to reflect on that, or Yulia, I invite you to also maybe unmute and maybe just add to that, maybe to highlight which area you'd prioritize and why.
Hi, okay, thank you. Yeah, what I prioritize is investing in I think the choice around the private sector, so enabling the private sector to have an active role in food systems in a very incentivizing way. I think that's the only one that I chose because I thought that's the most that's the choice that creates the most public benefit out of all the ones that we've seen.
Getachew, would you like to respond, or is your video is just full enough?
No, I think in terms of prioritization, I mentioned that the three are the critical priority areas which could not which should go together, which should go hand in hand, reinforcing each other, and it's very difficult for me to choose one. But depending in a certain context, we should use the three tools, the three strategies.
So maybe a follow-up question from Olugbenga. Olugbenga, could I invite you to just unmute and pose your question?
Okay, so good afternoon, everyone from Nigeria. It's past 2 o'clock. Okay, so looking at the Mentimeter votes, the majority chose that everything is important, which I also agree with. But in terms of government intervening to de-risk the private sector and all of that, how do you ensure that these interventions do not distort the market in such a way that the agri-food system becomes not globally competitive and it's not economically sustainable when you now withdraw such interventions? So that's what I think that question should be for Eric, but I don't know if Eric is still there, Eric Makaria. Then if anyone wants to just go ahead and take it.
Well, we can also hear Getachew's view and then Eric. Because, you know, the issue of market distortion.
Yeah, so no, I think from our side, we have been dealing with this. We have been brainstorming on the market distortion, crowding out private sector, crowding in, and all those things. In agri-finance and agri-insurance space, private sector alone cannot do it. And we have been like studying other markets, other mature agri-finance and agri-insurance market where the government takes a driving role. But the incentives and this de-risking mechanism, we discussed it should be time-bound. One, it should be a catalytic, it should play a catalytic role, and it should operate within the market system framework. So it's not to make a private sector lazy or to provide to crowd out private sector, but it should really play a role whereby private sector will get into the market, understand the market, and then when they see a business model, a business case, then the incentive will be taken into to other sector and to others. So, and this incentive is also based on a certain framework. For example, in our case, for financial institutions who go deep into very far rural areas, to pastoralists, to PSNP, productive safety net, very poor, vulnerable household, the incentive is high. And for those who focus on commercial, it's low. So it's very much targeted. It's a very much within a certain time framework, and then it would gradually reduce. So it will play a very much catalytic role, not a blanket type, not in a way it distorts the market.
Okay, it's clear. Do you still want to react, Eric?
Yeah, so I get it. It should be time bound. It should be catalytic. It should not be something that is a continuum. There must be an exit point, and the exit point would be when there's a business model that is sustainable. So I get that. That 4 points is very clear. Thank you, Getachew.
Okay, thank you. Do you still have some question, Thomas, or can we go to the next statement?
No, I think given the time, we should move to the next statement, though. It would be great, Eric, if you could hold your response to that for after the next Mentimeter, when I think you might be asked as well. So keep that in mind. Thank you.
So the next statement, for international financial institutions, that they should move beyond traditional lending to become the primary architect of transition bridges in low and middle income countries. So you have several options again. They should provide long-term, low-cost capital that allow national governments to de-risk their own policy shift. They should offer guarantees to the private sector, ensuring that the financial cost of going green is lower than staying gray. And then you have again the option of both should be priorities, or the correct priorities are not yet listed. So please answer through the Mentimeter, and we show the response while we are asking already Sander to start reflecting on this, and also what AIB sees as priorities in stimulating the transition of national food systems towards sustainability and inclusion.
Thank you. So I think the majority here seems to agree that that both should be a priority. I think this is a very interesting question. Also, sort of ties in very well to the previous statement in terms of what is the role of the government and what is the role of an IFI? So what is the role of the financial sector, right? Should IFIs actually drive anything? If you look at what happened at the, when US aid retracted from or left a lot of countries in Africa, you saw that in terms of the health system, there was a huge reliance on US aid, and effectively had taken over some of the functions of government. And as a result of US aid departing, you saw that parts of healthcare was no longer provided, that there were issues in terms of the supply chain, etc., etc. So should an IFI actually be part of an architect or should that responsibility lie fully with the government, which then sort of uses IFI funding to spur those area where they want to direct it. I personally think, I would personally tend to go towards that first statement, in that, the government should take a very strong role in leading and also in coordinating. So one of the main questions, I think, going back to the overall sort of lead questions for this live session is, um, what would be needed in terms of innovating funding mechanisms, technology, etc., to strengthen these food systems, and what is and should finance be, or IFI financing, should it be complementary to domestic public financing, or what is the role in that, right? So I think personally, that we need to have the government needs to be in the lead. IFIs should not be an architect. They should be a tool for governments in order to implement their policy changes, right? So if you look at then, in terms of the answers here, providing long-term low-cost capital that allows national governments to de-risk their policy shifts. I mean, they can to de-risk it. I'm not so sure about that, but in order to sort of fund that and to feed into that, for sure. If you look at what EIB wants to do and tries to do, particularly in terms of the food systems, the food systems are a priority sector for the EIB. We try to meet both the basic needs and also the support for economic development, in order to to grow. To obtain growth through stronger value chains and through market integration, right? I mean, that's the whole sort of EU policy in any case, also for the EU itself. And I think that we support that over also outside Europe. So we take a systemic approach, and we fund the full value chain, from farm to fork, as they say. We do the production, processing, logistics, and the market access, because many of the key constraints, such as post-harvest losses or weak connectivity, they're systemic and they require sort of global or nationwide addressing. So and then you can also dive in a little bit into sustainability. We do, as we mentioned before, right? We focus on the climate smart agriculture. In terms of inclusion, we try to sort of also work with ensuring that women are also integrated. I mean, I think that's the same thing for the Rabobank. You have the same objectives. There's the famous 2X challenge, which financial institutions like to adhere to ensure that in some cases at least 50% of loans are provided to female entrepreneurs or farmers. This is the case also for RUVIP. And then again, because the EIB is a macro player, we try to focus on mobilizing investments at scale, right? Because that's what we do. We can't do the smaller sort of investments. We try to act as a sort of macro player and then ensure that we address the whole market, either via financing at the national level, via the government, or via intermediaries to reach the lower level. So in short, we try to combine sustainability and resilience and inclusion in order to have a value chain approach. But again,
Yeah.
sorry, I think that I'll leave it at that because you're short for time. Thanks.
No, I think you have pointed out very clear the role of the EIB, how you see it. Maybe we can ask Thomas, are there any specific remarks or questions on this subject?
Yes,
from the
audience? Yes, a follow-up is from, I believe, another Dutchie, Joris van Hees. Yes, agree. IFIs such as World Bank, ADB, IMF have their role, but we have seen when there are financial or economic crises, a balance should be found between what countries want and how banks can facilitate. And should countries not develop their own financing mechanisms in the future? Question mark.
I think
clear
that's
for you, Sander?
Yes, very clear. And I think it's very important. And that's why a lot of countries have their own development bank, right? So, for instance, Ethiopia has their own development bank. Somalia is setting up its own development bank. Many countries have that. The question is, and it's I hope we have time for the last question later on. But the thing is always, where does blended funding come from? Because in the end, that's what drives the whole IFI business, right? And that's what we use in order to try and make changes to the system. EIB is an actor which tries to, go there where the market sort of is set to fail, where we see a gap, where commercial banks, for instance, don't want to go, where they think it's too risky, and that's where we try to come in. This is done to, these incentives are tried to be created via blended funding, blended financing. So why do people give blended financing? This is a crucial sort of element in this whole narrative, because national development banks, for instance, don't have that sort of blended financing, right? Either it comes from the government, so the government could do it directly, but you need some kind of blended financing to achieve certain changes. So, and that I think is where it's become interesting. But effectively, my main point for today should be, a government should never ever become fully dependent on that. It should use this kind of blended financing to spur that change, but not become dependent on it, because otherwise, things like what you've seen from USAID's departure, that kind of thing can happen, and that's never a good thing.
No, but in blended finance, there's also always a private sector involved.
Yes. Okay. Here we come a little bit into what we call blended financing, but I mean, in order, so again, for blended financing, there is a component of grants, and there's a component of private sector, right? And the whole idea of blended financing is that the blended, so the blended part, the grant part that you blend into the financing, that's used to create a certain change, a certain objective, without which certain things were not possible. For instance, quite often we use blended financing because to ensure concessionality requirements, because the country, for instance, if we fund at a sovereign level, because a country has IMF imposed restrictions. So you need to ensure that a country can take up a loan by blending in sufficient money in order for the country to take it up. If you go at a private sector, you give funding, give grant money to either meet a certain financial viability objective, you meet a certain target of I don't know, a national sort of energy, or the national tariff, or for whatever reason, you can blend that money in. So the question is always, what is the objective, and what do you try to achieve with that? But most importantly, the person who's giving it, what is his interest? Because that is a narrative which is now changing very much in a global setting.
Thomas, okay.
Yeah, I'm just Mbinya raised her hand. I'm just wondering if that's a very quick question, although I see it was lowered. So Mbinya, is there anything you wanted to ask quickly, or can we?
Oh, yes, thank you. I was actually thinking if that was an exam, I would have failed because I totally underplayed the word primary. So, Sander very well explained. But I have a tangent question to that. We have been talking and planning and strategizing for improvements in food systems, food security. Where does it start breaking down? Is it at the policy level? We do not have enough resources to finance these policy shifts? Or is it the commitment? Is it the tone at the top? And I'm asking this generally because I keep grappling with this. There's a lot of effort going into this, and yet the results may not be commensurate to the level of effort we're seeing. Where is the bottleneck?
A very good question, and I have to say, I don't think there is a general answer to that. I think it's very country specific. So, in some countries, face certain bottlenecks in terms of production. Some countries, face a lot of problems in terms of, in terms of land ownership, or a lot of restrictions in terms of exportation. I can't really give you an answer that's general, because Africa is super diverse, and you can't really give a general thing, right? So in the countries where I've worked, and I admit I've only worked in a few countries in Africa, but I've seen in a lot of cases that, well, first of all, it's policy. So a lot of the policy is not necessarily driven for the improvement of the country, but it's quite often, and then I'm talking about financial policy in terms of, for instance, currency exchange, in terms of export and import restrictions, in terms of who has access to the market, those kind of things. It's quite often not in the national interest. So there, I've seen several instances where, from a development theory perspective, changes could be made. But again, I can't generalize.
Okay, very interesting discussion. I hope we can continue, but can we now go to the last? I guess we will not be able to do the last statement, the fourth statement, unfortunately, Sander. But let's
Okay.
go to, yeah, that's why I gave you the floor
It's
to
okay,
say
don't worry.
something on blended finance. The majority, this last statement we will discuss, and before closing, is the majority of private financial institutions will shift their investment portfolio from gray to green only when the regulations dictate this. So please answer strongly disagree or strongly agree. We see there is a barometer on this. And while you're answering, I'm looking at Eric to say some few words on this, reflect on the outcome, and also answer how Rabobank looks at this.
Yeah, thank you, Mariel, and very interesting conversations, especially in the area of blended finance. In terms of sustainability, I'll try to be very brief. From a Rabobank and Rabo Foundation perspective, sustainability is increasingly being embodied in how we assess investment, and that's particularly in 3 areas. One, it's environmental, climate resilience, and sustainable land use. Increasingly practices like regenerative agriculture or reduced input intensity. Secondly, is on social, farmer inclusion and improving livelihoods for smallholder farmers, value distribution, and other smallholder farmers are meaningfully integrated into value chains. And thirdly, in governance and financial sustainability. That's also an area that usually look at sustainability, whereby strong governance, transparency, and the ability of institutions to sustainably serve agriculture over time. Again, it complements well with blended finance and the questions being raised here, in that it starts from the very top, from the government. I'll give you an example of, I received a concept note all the way from Rwanda, a 150-page concept note from someone who is in the coffee sector trying to scale up to an area of 10,000 hectares. The concept is quite okay, but at the end of the day, has there been sort of structures starting from the top, from the government in that area in regards to how you want to scale up the food sector, etc. And being as much as you're trying to understand all this area, I think development partners like EAIB or even Rabobank can only come into play once structures like those are actually quite adequately addressed, and they're actually done that in phases. Still in that statement, what motivates Rabobank? Motivation is actually twofold. One is that first, risk management should be addressed. Unsustainable farming systems are simply higher risk over time, whether due to climate shocks, soil degradation, or weak value chains. Secondly, long-term opportunities. Sustainable food systems are where future growth will come from. So aligning portfolios is both a risk and a strategic consideration. What we would like to do more of and what is needed. So basically going forward, we would like to go further in areas such as measuring real impact at farm level. we have a whole department that actually assists us on that, and we are quite keen on that in each of our partners. Financing transition pathways, not just already green clients. So that's an area that we also look into, working with strategic partners to actually offer capacity building for organizations that actually do not qualify for our ticket sizes. We also support climate and nature positive investment and scale. But to do all that, we need three things from the ecosystem: better data, especially at small order level. I think Rabobank and Rabo Foundation in general, we actually try to actually have a lot of research on that. Risk sharing mechanisms from public and development sectors. Glad to hear that at least EIB is trying to do their part, and also the government should also do their part. And finally, clear policy signals so that at least sustainability is not a risky option. Ultimately, I think private finance scales only when sustainability is not just the right thing to do, but also the smart financial decision. So I think at the end of the day, the private sector only comes into play if at all players are doing their bit of work.
Okay, thank you so much. Very nice. Thomas, do you still see very interesting points coming from the public, from the audience?
There's been a few questions and comments while Eric was speaking, but I wanted to bring back a question that came from an earlier part of the session from, apologies if I mispronounced, Emna Bisere, which is to all three speakers, but Eric, maybe you can respond first. I have noticed that the financing considerations presented are focused on food production, processing, and maybe distribution. Are there financing considerations that can influence behaviors and consumption and policy environments? Until the loop is completed, our food system transformation will remain fragmented.
Interesting.
Well, to influence behavior, it's quite difficult, and in my experience, over 10 years of experience, in this space, is that typically we are trying to do that, and it's only in the last few years that you have seen a bit of a positive feedback on that, and it starts actually from the top. And I'll give you an example. I just highlighted a 2-year project where we worked closely with one of our strategic partners called Coldaid. And what you're trying to influence is that we need to have a shift from traditional agri value chains to probably sustainable projects like green finance and agroforestry, etc. However, we're having a lot of challenges to actually build on that. And it's actually coming back to the institutions that you support, the MFIs, the SACCOs, because at the end of the day, what we need to actually be in alignment with is the management of these financial institutions. Are they actually in agreement that that's an area that they want to address? Because as much as in Rabobank and Rabo Foundation, we feel that that's actually a very crucial sector. We're actually getting a lot of feedback, because one, sometimes in these particular areas there is no commercial value in them, and as much as we want to influence behavior, and we want to do that through financial institutions, all the way back to the farmers, can we actually influence behavior starting with the management of these financial institutions? So at the end of the day, we can go all the way to the farmers, smallholder farmers, as we do here in Rabo Foundation, but also influencing behavior has to start from the top. And if at all we can be able to convince the top in the financial institutions, and also probably even the government, I don't know whether Sandra can also agree to this. I think at the end of the day, we can probably influence behavior at the lower streams. So I think it's something that we are trying to address critically, and it's slow, but I think eventually you're going to get there.
Great, thank you. And I just wanted to ask, Getachew, are you still there as well? So
Getachew?
Yes, I'm here. Yes.
Great. So Sander mentioned when he was speaking about aspects of gender, and he also referred to Eric. And I wanted to bring back this question that came in earlier while you were presenting, but we didn't have the chance to answer, which is, I'm curious about how these pillars or solutions in Ethiopia are taking into account gender and the particular barriers women might face in getting financing, especially on the NAFA, when you say that it ensures credit gets where it's needed and no one gets left behind. What are the mechanisms in place to make this possible? Curious to hear more. And apologies, I didn't make a note of the person that may ask that question.
Yeah, no, this is interesting. This is well taken care within the NAFIR framework. We are designing a targeting framework currently. So the targeting framework takes into account the different farmer segments. So we have farmers who are subsistent, farmers who are semi-commercial, farmers who are commercial and well market oriented, but there are also other targeting element where women, youth, and the pastoralists are treated separately with high level of incentives. So we have these three categories, basically the women, the youth, landless youth, and the far remote pastoralist areas, which are basically considered a risky segment for financial institutions. For instance, whoever has a portfolio of women more than like 80% or whatever, the refinancing rates would be very high. The risk sharing rate would be high. So basically, we use a standard 50% risk sharing, a pari passu 50% risk sharing arrangement. But for women portfolio, the risk sharing could go up to like 70%. For pastoralists, it would go up to 90%. For youth, it's different. So this is not a finished product. It's a work in progress in terms of finalizing this targeting framework. But women, youth, pastoralist communities are treated separately in a way. So this, we call it an inclusive framework. So the inclusive framework for NAFIR is when it considers women, youth, and the pastoralists as a substantial portfolio of financial institutions. So it's very much taken care of, Eric.
Thank you so much.
Okay, thanks.
In light of time,
Thomas?
Marielle, then you need
Sorry?
to take over. I think in light of time, that because we've only got 8 minutes left, so maybe we need to bring it back. But just a reminder, we do copy over people's questions, and we'll send it to the speakers. We can't guarantee, because they're volunteering their time, that they'll be able to answer all of them. But any answers that we receive from them, we'll collate and share back in the group as well. So thank you for your questions, and do please pose any last ones in the chat. Over to you, Marielle.
Yeah, thank you so much. And thank you also, both the audience that has been very active in asking questions and also the speakers, especially the panelists. I would like to thank you so much for all your insights and some of the very interesting discussions you started on several subjects. And I think even for myself, there are some insights. I got some new insights. So that's very nice. With this, I would like to ask Bram to highlight us on the next steps and then to ask Lisette to close the session. Thank you so much.
Yes, thanks, and everybody for joining and also being very active both in the chat and also asking your questions live. And of course, a special thank you to the 3 experts that we had on board. So Sandra, Getachew, and Eric, many, many thanks for your presentations and your reactions to the statement and answering also the questions of the audience. We had, I think at the top, 230 people online joining. So I'm very happy with the number of people that joined and specifically also the very active participation. There will be another live session during Module C. So that is in about 3 weeks, I think. We hope to see you there again and to have interesting discussions then again, which will help you further grasp the role of public and private finance in food system transformation. Thanks very much, everybody. Hope you enjoyed it. And we will take note of all the questions that remain unanswered. and we will try to find a way to get all those questions answered. Thanks very much, everybody. Thanks for joining, and have a lovely evening.
Thank you.
Thank you. Bye-bye.
Thank you
Thank
so
you
much.
all.
Thank you. Bye.
Bye.
Thank you. Bye.
Hey.
Bye.
Thank you. Thank you.
Goodbye.
Bye.
Bye. Go ahead.
Thank you.
Thank you. Bye-bye.
Mungore.
Bye. Bye.
Odabo.
Kwaheri.
Thank you.
Bye.
Au revoir.
Bye.
Bye-bye, everyone.
Bye. Thank you.
Thank you, Ahmed.
Thank you. Bye-bye.
Bye, Francis.